Happy Monday, everyone. So I want to kind of go over Tesla because I put some notes in the Discord channel this morning. If you guys are not a member of my Discord, I have a private Discord. That link is down in the description box below. We talk trading, go over trades, entries, exits, the whole nine yards. With that being said, what I was talking about this morning was, be careful on the rally because stocks are under supply. Um, and the reason why I said that is because of the selling pressure that we had Thursday and Friday in the overall markets. You know, it really brought stocks and the indices below macro levels of support. Okay. So we're underneath supply. So, with that being said, anytime you get 1, 2 days of selling or even 1, 2 days of, stocks going higher, you always get that pause or you always get the dead cat bounce, or you always get the slight pullback, right? So a lot of times the newer traders mistake the dead cat bounce or they mistake the pullback, depending on the situation of what's going on. They mistake that for, whatever was happening is now done. Meaning that in our case, stock sold off for 2 days. So now we start bouncing higher. It's like, hey, buy the dip. Now is the time where you buy because we're going higher. And what you're quickly learning in 2022 is we are pretty much range bound. They have us pinned below the 200-day moving average and obviously well under the 50-day moving average on the NASDAQ 100. A lot of stocks are in their own bear market. So the indice as a whole, meaning the triple Qs, the SPY, are not in a technical quote unquote 20% bear market, but there's a lot of stocks more than 20% off their highs. A lot of stocks are in their own bear market. So with that taken into account, these rallies that we get with the volatility that's going on in the market can be extreme. The bounces can be very, very extreme. And it can seem like everything's going to the moon, everything's going back to normal. And then you're quickly shown that, 1, 2 candles is really all it takes for that rug to get pulled. Well, because anytime you're underneath supply, the moves downward are always going to be more extreme. Just like when you're oversupplied, the pullbacks don't seem so bad. The pullbacks happen and it's like immediately they get bought back up and we're going higher. So just kind of taking a look at Tesla, where we're at, for me to want to get long on Tesla, meaning if I want to start some sort of swing position or I feel comfortable holding this longer than, 20 minutes, because the market's really not giving us anything, to really hold all day or into tomorrow. Tesla needs to get over 947. There's no ifs, ands, or buts about it. I don't care what you think the stock is going to do. I don't care if you think we're going to 1,000 or 1,200 or it's oversold. It doesn't matter. The short-term technicals on Tesla is 947. And why it's 947, we're going back almost 2 weeks now. Every time we've come into this 947, we've been rejected. 947, we've been rejected. 945, we've been rejected. 947, we've been rejected. 947, we've been rejected. 946, 943, rejected. So today's bounce is good. I actually did scalp Tesla long today. And if you want to see what I did and the strategy that I used, definitely subscribe to my channel. I'm going to put that video out a little bit later, but I was able to take just about $2,000 on 5 options contracts of Tesla. So was a scalp. I didn't play $500. So I'm not going to sit here and say, hey, put $1,000, buy one options contract on Tesla, make 2,000. No, I was over $10,000 invested on this play at one time. So just kind of want to keep that in context, because again, I think a lot of people see, people post big gains and it's like, hey, how'd this person make 10,000? How'd you make 1,000? How'd you make 500? How come I played and I only made 50 or 80? It's like, you have to look at the big situation. I was well over $10,000 on this play, but I was under 15,000. So I'll just let you kind of ponder around how much I had invested on 5 options contracts of Tesla today. But The level that I was pointing out this morning was I said, good bounce here on Tesla. But what I'm concerned about is we are coming into hourly supply, right? So this 200-day moving average on the hourly time frame at 901, Tesla was coming into this supply. So anytime that we reconfirm a level of supply, we can expect to trade from supply to supply or demand to demand. So being that we confirmed this 20-day moving average on the hourly time frame, Tesla had room to run higher, and that price, that confirmation was around 870, 871. When we confirmed that, we quickly ran up to highs of 899, 900. And why did we stop here, guys? Why did we stop? We ran into the 200-day moving average. We also ran into this area that was acting as support here, okay? So we also ran into this area that acted as consolidation. There's a lot of price action here. There's a lot of price action here. Support, a lot of price action, a resistance. So this 900, this 200-day moving average on the hourly time frame is going to be a level that we need to be concerned about. It's going to be a level of rejection. Now, when we clear this supply out, Tesla will have room from 900 into that 947. And it's even at that point, I would not tell anybody, hey, as soon as we confirm the 200 on the 1 hour time frame, it's time to go long. Let's hold this thing. Let's swing it. We're going back to 1200. No. We confirm 900. Maybe we have room to 920, 930. We want to be selling into the next resistance. We do not want to be buying into the next resistance. We want to sell into that strength. The next play after that is when we break 947 and backtest 947. As soon as we do that, that second push off of 947 is now where we're going to have a macro trade potentially into 1000. Now, to the downside, 833 was the lows today, and you can see 792 is a previous area that acted as a strong demand zone here. So if you're looking for a short position, you do have a scalp below the 20-day moving average at 865. 865 will give you room to 833. Again, will be choppy though in this area. It's not just going to be a straight line down. It will be choppy. You're going to have to size down, allow yourself more risk because of the choppiness. The bigger macro trade would be 833.19. So $833.19. As soon as we lose this, we want to lose this, put in a new low. We want to have some sort of little bounce. And then on that second pass through, that second confirmation, we want to be able to take this short. Definitely going to want to be covering our position into 800 and 792. So that doesn't mean, hey, we broke 833, we're going to zero, or hey, we broke 833, I'm holding this position, I'm up, big money bags at 792. Let me hold this and push this a little longer. Guys, don't be greedy. The move and the breakdown is 833. So if we go from 833 to 792, you got your move. That's the move, right? So I hope this video helps, guys. Do me a favor, subscribe to my channel, give me a thumbs up. I want this video to go out to as many people as possible, and I cannot do that without the help of your thumbs up on this video. Join my Discord. That link is down in the description box below, and I'll see you guys all in the next one.